Welcome to all of you once again. And today's session is really very interesting. And more so, I've got many of my colleagues from BHEL, my seniors, respected seniors, and also my juniors. And welcome once again. And let's start today's presentation. It's going to be really a very exciting one. So we started webinars during March last year, and till date we have already posted 108 number of webinars, and this is the 109th number. Almost every Sunday at this time we host a webinar. So creating second source of income. There are many questions. Why? What is the need? How? Who can help us? And whether what we are trying to do is right or not, and etc. etc. Let's see what has worked for me and also what can work for you also. And the duration of this webinar would be about 40 to 50 minutes. Yes, this is Smart Billionaire Picks, which was started on 30th of May 2001 with rupees 1 lakh, and today it has reached to 120 lakhs. Yes, it has multiplied 120 times during last 20 years, and this is a part of our product named Smart Gains. I shall come to you this later, because initially it was not for the public, it was held privately, but nevertheless we made a very hard and successful attempt, and with this returns it has delivered 26.6% CAGR for last little more than 20 years. Yes, 26.6% CAGR. Not only that, if you compare similar returns from BSE Sensex, then investment of 1 lakh would have grown to about 15 lakhs today. NSC 14 lakhs, Berkshire Hathaway 6.11 lakhs, Nasdaq 6.76 lakhs, Hang Seng 2.13, and others are simply not comparable. So that is the performance and how we did it. What clicks, whether it is the stocks, whether it is the timing, whether it is the portfolio, whether it is the inside information, maybe, who knows, let's see. And so in this webinar, what we are going to cover is why we need a second source of income, how to increase our savings. It is very natural. If you want to increase your second source of income, either you have to increase the investments or you have to increase your savings so as to invest more, right? And also you can increase your returns. And then how to create, what is the process, how to begin, and then last but not the least, how we can help you at Smart VRC, not only in creating the second source of income, but also enhancing the returns. So first, why we need a second source of income. So on 1st of October 2008, interest rate for 3 to 5 years bank fixed deposit was 10.5%. And today, you and me, we all know very well, it is about 5.3%, exactly half. Now, simply, what does it mean? It means 13 years ago, whoever has made a financial planning with the given input of 10.5% bank interest rate on fixed deposit must have failed miserably. Yes, within a period of 13 years. Now, as on date, what is the inflation? It is about 6%. Real rate of return is minus 1%. Yes. Fixed deposit rate today is about 5.3% for 3 to 5 years bank fixed deposit. Inflation is 6.26. So the real rate of return is minus 1%. That means अगर आपने 100 रुपए बैंक में रखे FD की, तो हर साल उसमें -1% होता जाएगा. इसे कहते हैं इन्फ्लेशन. इन्फ्लेशन मीन्स काइंड ऑफ दीमक जो आपका पैसा खाती रहेगी. जिस तरह से इंटरेस्ट आपका पैसे को बढ़ाता रहता है, दीमक उसको इरोड करती जाती है, उसकी परचेसिंग पावर को कम करती जाती है. सो इट इज वेरी नेचुरल. जो इंटरेस्ट रेट है, जो उसका ग्रो करने का जो स्पीड है, दैट शुड बी मच हायर देन द इन्फ्लेशन रेट. But presently, this is not the case. So putting a money in bank fixed deposit is actually eroding your money. So एक बहुत बेसिक सा क्वेश्चन है जो मुझे पता है कि बहुत से लोगों को क्लियर नहीं होता है. मैं आपसे जानना चाहता हूं, डू यू थिंक योर रिटायरमेंट कॉर्पस वुड बी सफिशिएंट टू प्रोवाइड फाइनेंशियल फ्रीडम टू यू? ओके. There are 3 options: yes, no, and I don't know. Yes, it is very much possible that you may not be knowing it, whether whatever amount you are getting would be sufficient for your life after 60. So let's see. So polling has started on your screen. You must be having the 3 options. I request all of the participants to participate so that we get the real figure. It is not only a fun, but it is a realistic thing. Okay, only 67% voting. Only 10 seconds left. Please make it fast. Very interesting results we are going to get. So overall, 80% of the participants have participated in this poll, and these are the results. 30% say that yes, they are very well aware, and they also think that it is sufficient to provide financial freedom to you. 39% no, and 31% I don't know. So overall, 60% people either they do not know or they know very well that yes, it would not be sufficient. Okay, thank you very much for participating. Whether you want to, if you are interested to know whether it would be sufficient or not, you can use our website, and later in the presentation, I will show you where to browse, right? Now, one of the reasons why we fail, we have already seen the falling rate of interest, and there is one more reason: life expectancy. Now, this yellow line, this shows the life expectancy for Asia, and as you can see, this is the fastest rising line. So every 10 years, your life expectancy increases by 1 year. So if your age is 30 years, and if you are planning for retirement, then naturally you have to plan at least 8 to 9 years more than the present life expectancy. Post-retirement, there is hardly any source of income. So whatever you have to save is before retirement. So these are the major financial events, or rather I can say liabilities, which you have and we all have to fulfill. Most of us get a job at the age of about 25, and we should plan for our house at the age of 32. Some of you may be asking, why so early? Yes, because of the tax benefits, and also the early you buy, you will be more comfortable in the later part of your age, and then you can plan for even early retirement at the age of 40. Yes, it is very much possible. Child education at the age of 48, you will need money for your child education. And then at the age of about 50, you will need money for child marriage. And finally, official retirement at the age of 60, you still need money. So these are the various major, I can say, the milestone type of things wherein you need money. For each and every event, you can plan independently. Yes, for each and every event, you can plan independently. I did the same. So this was all about why we need a second source of income. Now we come to the how to increase the savings, because most of us are unable to save much at the end of the month, especially those who are in jobs. At the end of the month, they find that very little is left because of our habits. What we do is, first we do all the expenses, then whatever is left, we go for savings. Actually, it should be the other way. First, you have to plan when you are going to retire, when you are going to face the major financial liabilities, and then accordingly decide how much you must save every month. After removing those savings, then only you should spend the rest of the money. That should be the right way. So maybe for the beginners it may work, but what about those who are already in their 50s or 45 and they want to increase their savings? So for that, I would like to give you my own example, because I did something which was not planned in the very early age of my life, but some of the things I knew very well that yes, they work very well. And what are those? So there's something about 2 minutes I will take, and something about AKS myself. In the year 1988, I completed my BE Electronics from SGS ITS Indore. And then I joined BHEL. Yes, the great institution, the great public sector, one of the highest paying public sectors at that time, and even till today, it is one of the best paying public sector. This is a great institution. I joined in the year 1988, and then I was transferred to Bhopal, 1989. So what happened? In the very same year, I visited my cousin's Griha Pravesh. Yeah, they purchased a new flat in Thane, Mumbai. And out of curiosity, I asked, what is the total cost you paid for this flat? And she said about 8.5 lakhs. And at that time, my stipend was 2,400 rupees per month in BHL. And that was very substantial amount when I compare with other public sectors or with other private companies during 1988-89. So after hearing the cost of that flat for 8.5 lakh, on the back of the envelope, I did some calculation and I found that with this salary, with this savings, it is not possible to purchase even this small flat. And that is how my curiosity started. I should have the second source of income. And then I zeroed on the stocks. Why? Because historically, I read many books and many things that historically, stocks are the only asset which give you the highest returns. We'll come to this later. So how I started? I started with an investment of only rupees 4,000. Yes. And over a period of time, like we all do, I started with IPOs, then I did some sort of technical analysis, and then came the 1992 great, what people know is Harshad Mehta scam. I don't blame that person, but yes, it is known by that event only. And then I realized what are the risks involved. My portfolio went down 83%. Yes, after the boom time, when the index was something about 4,000 plus at that time, my portfolio declined by 83%. And that I think I was very fortunate that I met with such a big crash. Yes. Then I realized first we should look for the risks involved and then the return. But what we do most of the time is we always look for the returns and just don't bother about the risks involved. So that is how I restarted my learning, and I added qualifications, and also with more and more qualifications, I came to know that it is the fundamental analysis only which can give you very good returns in the long term. And over a period of time, I added degrees qualifications like MBA Finance and then ERA from SFA Hyderabad. And now I'm pursuing PhD. And in fact, I'm developing a model for stock valuation with minimum inputs, how we can find the worth of the stock. Yes, not the price. Price is already available, about the worth of the stock. So when my passion grew and I was free of my liabilities, financial liabilities, in a sense, I had enough money to take care of my remaining liabilities, and I was debt free. So I quit BHEL when I was in the management level at senior DGM just to pursue my passion. And now I'm pursuing my passion. I'm very happy. And I'm helping investors to know, to share my wisdom, what it requires to create wealth from stocks, because more than 95% of the investors fail in this field. Yes, more than 95% of investors are not able to create significant money from stock market in the long term. I am registered with SEBI. Yes, I said. And my son, he did BTech in computer science from IIT Kanpur, and then he pursued MS from Stanford, USA, and now he is doing startup. Why I have displayed this? Because during his studies, post-graduation studies in Stanford, there was a huge expense of little less than 1 CR. Yes, initially I took a loan, but within 6 months I repaid everything because of my financial planning. So this is what I wanted to share with you, and this can help you also, and more sharing will be done as we subsequently see the slides. Okay, some of the other things, I can say the habits which help me in saving is I never used high-tech or advanced cars in my initial period of the job, because I knew very well that these are highly depreciating assets, including the mobiles. When the mobiles arrived, I used only the average mobile, average technology, always went for the second grade technology, not the top one, because there is a sea difference between the second technology and the top technology. So that is how I saved more and more, and all those money I invested in stocks. And you will be surprised to know that I availed housing loan in the year, I think about in the year 2000, and I was the first person to go for 10 lakh loan in BHEL. Yeah, that clerk used to say that I don't look for your name, but I look for the 10 lakh loan, because at that time BHEL used to provide subsidy maximum to 10 lakhs, and I knew very well that this will pay me later. At that time, it was a very tight position, and to share with all of you, I don't have even the money. At that time, I didn't have the money to even stretch a boundary which was worth about 10,000 rupees at that time. And I took a big loan, and I availed a lot of concessions in the form of income tax rebate, and that also helped me a lot. I sparingly use credit or debit cards as far as possible. I pay in cash, and that also helps me. And I know very large number of population who uses credit card, and in the process they pay an interest of about 20% per month, and they are invested in bank FDs earning interest of only 5.5%. Not only 5.5%, but they also pay tax on it. So This is my sincere advice, especially to youngsters. Use credit cards as sparingly as possible. And also keep negotiating for your interest rate on loans. This is the easiest and the fastest way to improve your savings. And all these things are known as be frugal. Yes, invest. Yes, I'm not saying that you should not go on the outing with your family, but keep a restriction on that, not that frequently. Wherever possible, you cut your expenses. So these are the other ways to raise the savings, and all these things we have covered in our video. It is with the name of Financial Freedom, and it is available on our website. Of course, on a very nominal fees, and that also we'll cover in times to come. So what happens? How to make the first savings? Because I know very well, cutting the expenses is very, very difficult. So the first thing you can do is you try to negotiate with your banker for the interest rates. This will reduce your EMI. As it reduces your EMI, it increases. You can simply invest that in various investment assets like gold, stock market, bank FD, etc. Also, you can do one thing. Since your expenses have reduced because your EMI has reduced, you can even repay the loan, part of the loan. So it moves in a cycle. It's a kind of a snowball effect. So that is the fastest and the easiest way. Now coming to the returns, these are the, whenever we talk of the returns, we talk of the proper asset allocation in your total portfolio, bigger picture. Look at the bigger picture. What are your investments in fixed deposit? What are your investments in gold? What is your investment in real estate? When I say investment in real estate, so you need not have to add the present value of the house where you are staying, where you are living. So you have to add real estate only on additional plot or additional property. And then last but not least, the equity. As a thumb rule, it is said that your investment in equity part should be 100 minus your age. What does it mean? So if your age is 30 years, so your investment in equity should be 100 minus 30, that is 70%. What I mean to say is hold this, you add all these and 70% should be in equity. But practically, I've seen that it is a rare case. My age is 55, so 100 minus 55, I should have an equity exposure of 45%. Of course, I have much more than 45%. And Mr. Rakesh Junjunwala, he says that 98% of my investment is in equity. And that is how he has multiplied his money like anything. So these are the great personalities who are counted among the richest persons in the world, and also in our in the corporate sector, India corporate sector. We all know these people. What is the common factor? These people have made immense money. What is the common factor? All these people are doing a business. They are businessmen, right? Like in case of Ajim Premji, he is holding a huge chunk in his company Wipro, and because of the increase in the share price of Wipro, he has accumulated so much of wealth. He is worth so much of wealth, and the same holds good for all of these people, whether it is Jeff Bezos or Warren Buffett or George Soros. Or so the common factor is business. Nobody has ever accumulated huge wealth by doing a job. Yes, there are very few people, very, very few. But if you want kind of many times returns on your investment, then you need to do a business. But question is how we can do a business. We are very small people. I started with 4,000 rupees. Yes, there is a way out. Way out is shares. You invest in shares. When you invest in a share, As the name itself is there, share. Share means the part ownership in a business, right? When you buy some shares, you buy a part of that business. When you are buying Reliance share, you are buying a part of Reliance business. Yes, that is how we can participate in business. And not only we can participate, it is so fast to change your business. The moment, only on the click of a button, you can sell your ownership in a certain business and buy some other business without any much legal framework or nitty-gritties involved in real buying the whole business and selling the whole business. So that is the fastest way and one of the best ways to create wealth. Okay, creating second source of income. Yeah, you may be thinking that how you need a lot of money to invest in stocks. It is not like that. Even you can start with rupees 1,000 also. Yes, you can buy even a one share of any company. So that is how you have to begin. Yes, it will be a small beginning, but once you realize the gains, automatically you will try to put more and more money into this stream of income. Like एक नदी में क्या होता है, एक उसका एक उद्गम होता है जिसको कि हम सोर्स बोलते हैं, वहां से एक छोटा सा उद्गम होता है, वहां से नदी का बिगनिंग होती है. And then on the way there are many tributaries, many confluences, और भी नदियां आके उसमें मिलती है, और भी सोर्सेस ऑफ वाटर उसमें आके मिलते हैं, और वो साइज में बड़े होते जाते हैं. दिस इज द विड्थ ऑफ द रिवर. एंड देन जब वो एक सफिशिएंट साइज हो जाता है, नदी में एक सफिशिएंट बहाव होता है, सफिशिएंट पानी होता है, तो उससे हम कैनाल्स बनाते हैं और अपनी लैंड को इरिगेट करते हैं. द सेम होल्ड गुड फॉर इंडिविजुअल्स आल्सो. When you have developed your portfolio of significant size, you can withdraw money for your important financial events, for your important financial liabilities. So that is the way. But आप उसमें से कभी इतना पानी भी मत निकालिए कि नदी सूख जाए. Right? I hope you got the message. Let it grow, let it grow. उसको बड़ा होने दीजिए, और फाइनली जैसे कोई भी नदी होती है वो जाके समुद्र में मिलती है. Similarly, keep growing your portfolio. Nothing to worry about. Let the retirement comes. Let you reach to the age of 60 and keep on continuing it. Yes, you heard it correct. It is not necessary that once you reach the age of 60, then you have to sell the stocks. Only you can change the quality of the stocks, right? You should move towards more safety when you reach to that level. Moreover, even post-retirement, suppose the average expectancy is 80 years. So after 60 also you have got 20 years to take advantage of the stock market gains, to take advantage of the power of compounding. More about compounding or later. So it has come immediately. This is the compound interest formula, and we all have read this compound interest formula when we were in class 6th or 7th, but most of us even today are not able to appreciate the power of compounding. Yes, it is very, very powerful. Now it has got basically three components. First is the principal, that how much money you invest. Then second is the rate of interest or rate of returns you get. And then the third is the number of years you multiply your money. In stock market, what happens? Everybody is interested in R. They want to invest the least amount. They want to invest for least period, and they want huge returns. It happens. Whenever a new potential client calls me up and he asks me, what is your targeted return? And when I say that it is about 30 to 35%, so he asks whether you are selling for a month or for a year. As soon as I say for a year, then he says, oh, 30% is very less. We are looking for about 20% returns in a month. See, with a 26% returns every year, you multiply your money 10 times in 10 years, 20 times, 100 times in 20 years. That is the power of compounding. If you invest 10 lakh rupees today, and if you are able to generate 26% CAGR, your money will multiply in 20 years to 10 crores. And I hope 10 crores is more than sufficient for most of us here. But then even 26% returns are very, very difficult to generate in a year. Yes, it is very difficult. We have done it for last 20 years, but I know very well what are the risks involved and how much strong conviction you need to have, how much strong confidence you need to have. So those who are in 25 or 30 years of age, they should concentrate on N, the number of years, the power of compounding, right? Those who are in 45 or 50 years of age, they should concentrate on P as well as N. And those who are 55 plus, they should concentrate more on principal. Invest more because you have already lost considerable period. So you need to invest more, and post 55 years of age, most of us have sufficient savings. So try to divert more and more money into the stocks, more and more money into the principal. So in the long run, this is a very interesting data. 96% of the investors fail, right? 4% of the investors, they survive. Out of those 4, only 3% investors are those who are not even able to make Sensex returns. Yes, they are into the market, but they are not able to outperform even the Sensex returns. There are hardly 1%, even I should say rather less than 1% of the investors who are thriving in the stock market. Yes, from where I got this data? Wherever I go for a seminar or workshop, before COVID, of course, my first question is, how many of you have an investment experience of more than 20 years? So average, it is about 2.5%. And when I ask them what kind of returns they have made, believe me, it is not even 0.5% of the investors who say that they have made significant money. So it is really, really very difficult. And we will see why it is difficult. What is the problem? If the corporate is growing, if the corporate owners, if the promoters are making huge money, why not? We can make money. The first and the foremost thing is one must have a very, very strong faith in corporate. Yes, हमको कंपनीज के ऊपर, बड़ी कंपनीज के ऊपर या जो भी आप रिसर्च करते हैं उनके ऊपर बहुत स्ट्रॉन्ग फेथ होना चाहिए. कॉर्पोरेट इंडिया के ऊपर हमें फेथ होना चाहिए. वी वर्क इन आवर कंपनीज. जब कोई क्रैश आता है, राइट, मे बी ऑफ 2008 और मे बी ऑफ लास्ट ईयर्स क्रैश, हम में से कितने लोग होते हैं जो अपनी कंपनी को छोड़ देते हैं और दूसरी कंपनी में जाते हैं सिर्फ इस डर के मारे से कि दिस कंपनी में क्लोज डाउन? How many of us do like this? I don't think even 1% of the investor, 1% of the employees, they quit their company just because of the crash in the stock market. But when it comes to the stock, we immediately quit. Why? So, because in the first case, you have a strong faith in your company. Of course, not all the companies, but in most of the cases, we have strong faith in the company where we are working. But when it comes to stocks, we don't have the faith. Why we should have a strong faith? Let me tell you. Now, these are the investment assets we have already discussed: gold, real estate, bank FD, and even government treasury bonds and all those things, right? Who are the people who invest in these assets. Suppose there is a gold. Gold is purchased by either the government or the individuals, right? Housing, who buys? Individuals. And from where individual is getting the money? He is getting a salary from the corporate. So if the corporate stops distributing the salary, what will happen? This means we people will not have any money. So we are not going to buy gold or real estate. So prices will crash, right? Then it is the corporate which gives the interest to the bank because they are taken the loan, right? Now, actually what happens? We people make a fixed deposit in a bank, and bank, it does? Bank takes that money and lends to the corporate at a higher rate of interest. So it is taking a difference. So why not we invest directly into the corporate? And then coming to the government. Government gets tax directly or indirectly from corporate. Yes, you look at it. What are the sources of the revenue of the government? Personal income tax. From where it comes? From the individuals. From where the individuals bring that money? From the corporate. Then the second source of government is excise duty. From where it comes? Corporate. Then comes the corporate tax. Name itself shows, from the corporate. So GST is given by the individuals, but they give it to the corporate. So everything comes from the corporate. Corporate cannot fail. Corporate cannot fail. No government can afford that the corporate fails. And that is why post-COVID, trillions of dollars has been given by the US government to the corporate, to the individuals, because no government can afford to see the failure of the corporate. Government itself will collapse. So first and the foremost is you must have the strong faith in the corporate. Corporate will never fail. Now coming to the, I have shown you highest returns are provided by the stocks. And then we have seen that we must have the strong faith in the corporate, but corporate is a collection of many companies, thousands of companies. And we have to build a portfolio of individual companies. So a portfolio of stocks, about 16 to 18 stocks are sufficient. So first, what is the process? What is the process of building a portfolio? First, we have to select which are the good companies where we can invest, right? Then maybe you might have identified about 40 companies. Now we have to identify only best 16, 17 or 18 stocks. So after stock selection, you have to identify the best companies to invest. And then how much allocation has to be made in a portfolio? Okay, suppose you buy a stock. Suppose you purchased Bajaj Finance. Last year, it went down to about 1800 rupees or 1700 rupees. And today it is 6,000 rupees. So it is almost 3.5 times up. And you made an allocation of only 1%. So what will happen is, because you made an allocation of only 1% in your portfolio returns will be only 3.5%. Okay, your stock multiplied by 3.5 times, but you had a very small proportion in your portfolio. That is why the impact on portfolio was 100, only 3.5%. So that is how allocation in a portfolio is important. So if you have the perfect portfolio, it is only a matter of time when the other impatient investors will give you an opportunity to buy more of the good quality stocks. And also the other way, the impatient investors will quit from their stocks and they will allow you to buy. And the other way also, impatient investors will sell at the wrong time and they will also buy at the wrong time. when the valuations are very high and you are looking for making an exit, then there is an impatient investor who will buy from you at a high price. So after building a portfolio, what you have to do is you have to be very patient. And what we follow is, in a stock selection philosophy, is the bottoms up. When I say bottoms up, means first the company fundamentals, then the industry, then the economy. Yes, ultimately it is the company's performance which gives you the returns. It is not the market. Yeah, in the short term, it is the market. In the long term, there is 100% correlation between the company's performance and its share price. To give you an example, in 2008, on the peak day, on the last day of the historic high, Reliance Industries as well as Reliance Capital, I believe both were about 800 rupees. And today, we all know what has happened to the Reliance Capital. It has almost vanished, and Reliance Industries is 2100 rupees. Markets are same. What made the difference? It is the company's performance. It is the company's financial performance. Now, there are, apart from the fundamentals means the past, means what are the reserves, what is the dividend policy, what is the performance during the last 3-4 years. That is all fundamentals. We should also look for what is the future story, what is going to happen in times to come, what is the management thinking, what are the new technologies the company is adopting. That is very much important. To give you an example, now there is a film Sharabi, we all know very well. Cast was superb, Amitabh Bachchan and Jayaprada. Music by Bappi Lahiri, produced by Satyendra Paul and directed by Prakash Mehra. And this was a super hit film. Then also there was a film Jadugar, directed by the same person, Mr. Prakash Mehra, produced by Prakash Mehra, music by Kalyan Anandji, starring Amitabh Bachchan and Jayaprada. Almost a similar type of the fundamentals. This is what I say is the fundamentals. But when the picture released, this one failed. Jadugar failed miserably. Why? Because of the story. You need to look for a very good story. Fundamentals means the past, whatever has happened, it's okay. But what about the future? Because the returns will be given by the future performance. So one more poll. What is the right tool to measure the long-term success of a stock advisor? First option is success rate. That is the percentage of stocks hitting the target. Second is internal rate of return. Third is the number of clients. And the fourth is academic qualifications of an advisor. Sorry, there is some little disturbance. Yeah. So here are the options on your screen. The right tool to measure the long-term success of an advisor. Well, here are the results, and I'm very happy to see that 69% of the participants have opted for IRR, and this is the right tool to measure the success in the long term. Okay, success rate in the success rate in terms of the percentage of stocks hitting the target depends on how much target you have set. If you have set a target of 5%, 100% during last 15 months, there will be 100% success rate. If you set a target of 100% returns, then maybe this success rate may come down. So it depends on the target. Number of clients is no guarantee of the success of a stock advisor. As far as the academic qualifications are concerned, had it been only the academic qualification, then all financial experts must have accumulated huge wealth, but this is not the case. So thanks for participating once again. Now, what is our success rate? This is what you are seeing in the orange color is a smart billionaire picks. As I showed you in the first screen, this was the portfolio which we started on 30th of May 2001, and yellow line is for equivalent of BSE Sensex. On 30th of May 2001, this was started, but it was only for private circulation. Only my friends asked me to have some prepare some portfolio which can benefit all of us in the medium to long term, and then it went public. Later on, I made it public, and these are the returns. You can see phenomenal returns. Now we have already reached from 1 lakh to 1.2 crores, and now we are on a journey for 100 crores. Yes, 100 crores means 1 billion, and that is how the name of my book came, Way to Billionaire, from 1 lakh to 100 crores. Yes, it may take about little less than 20 years, next 20 years, because we have had a lot of learning and a lot of wisdom. Even with 26% returns, we have learned much more, many more things. And now I believe we should be able to reach 100 crores in next maybe about 17 or 18 years. So this is a small video about our activities. this was all about our smart advisory services. And regarding the performance, I would like to share with you that Smart Gains, which is a weekly publication. Here we give a pick of the week. Every week we advise one stock, and last 15 months XIRR, that is the internal rate of return, is 107%. Then under Smart Gains, we have one more product with the name of Smart Billionaire Picks. It is a basket of about 18 stocks, and during last 16 months, absolute returns are 169% compared to Sensex returns of 102%. Now here I would like to give you an advice. So whatever you are investing, when you are comparing the returns, compare it with the suitable Sensex, suitable index. It can be Sensex or mid cap index or small cap index. It depends what kind of portfolio you are holding. So it happened that a young chap, he called me last week, and he said that with my own research and with our friends' advice, we have generated good returns during last 1 year. So I asked how much returns they have generated. He said about 27%. Now I was wondering, when the Sensex has given about 70% returns during last 1 year, and this gentleman with 26% returns, he says that he has generated good returns. So you have to compare with respect to the suitable index. Absolute returns, comparing it with the bank FD is not the right way. Otherwise, you go and buy Sensex ETF or Sensex index mutual fund. That would be better. That will give you a good sleep and good returns and save your resources in terms of time and everything. So always compare your returns with respect to the underlying index, and you will be surprised to know that more than 50% of the mutual funds are not able to outperform their underlying index. Yes. And in mutual funds, you also give an expense ratio of about 2%. Yes, every year they deduct an expense ratio of about 2% in active mutual funds. So coming to the multi-bagger, Smart Multi-Bagger is way different from Smart Gains. And here we advise about 15 stocks in a year. And as the name says, multi-bagger, that means an investment horizon of minimum 2 years and target returns of minimum 100% in 2 years. So this is how multi-bagger works. And 1 year subscription price for Smart Multi-Baggers is 8,000 rupees plus 18% GST. For Smart Gains, it is 5,000 rupees plus 18% GST. So during last 15 months, internal rate of return in case of Smart Multi-Baggers is way higher at 131%. One more thing I would like to tell you, all our advisors work in a closed loop. So if I have given you a buy advice, 100% you will get a sell advice also, maybe on achieving the target, or maybe it is also possible that we may hit a stop loss, or some scenario has changed, economic scenario has changed, so we may have to exit. So it is like this. And for every advisory services, we provide a stock report which is available on website. And as far as the advice is concerned, that comes through multiple channels, through WhatsApp, through email, and also through our own mobile app. Yes, we have got mobile app also. So under multi-bagger, these are the stocks advised, and you can see the kind of returns they have generated during last 16 months. Caprians 500%, Advanced Enzyme Technologies 284%, Aarti Drugs 197%, and Motherson Sumi 292%. There are many stocks. Then also we have Smart SIP. It is a basket of stocks, and only one stock is advised at a time on the 5th of every month, and that provides the best value from that basket. So we already have about 17-18 stocks, and we pick the most valuable stock from that basket every month on 5th. Smart SIP XIRR during last 4 years and 9 months is 21%. Yes, it is pretty good. And because it is a systematic investment plan, so here the risks involved are pretty less compared to the previous two products, but also the returns are little bit less. Now, this is the one of the stocks which we identified, and as you can see, from January 15 till January 20, that is last year, there was hardly any movement. And then we advised based on the consistent performance quarter on quarter, and these yellow marks are the buy advice given. And as you can see how phenomenally it jumped. So once the public comes to know about the prospects, you have to wait till time. You have to have a patience. This is a Bajaj Finance. As you can see, many times we have advised this stock, and multiple mega returns have been generated by this company. We are using, for valuing the stock, we are using a technique known as PEG, that is P to growth ratio. And we have successfully used this technique from last so many years, and so much so that now I can say that we have gained an expertise. And this is a very fitting quote from Mr. Bruce Lee. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. We are not using any technical analysis, any chart analysis in our research. We are purely using the fundamentals, and we are applying a PEG ratio. That is the only technique. We are not using any specialized software. BSc India website is more than enough. And now coming to the very near to the end, and then we are going to have a very lively question and answer session. Would you like to attend more such webinars? I would like to know, so that we can make more and more improvements in our future webinars. I hope it is visible on the screen. Kindly participate in this poll. Oh. Yeah, 73% people have participated. I request all of you to participate, so that this is a free webinar, it is an open webinar, it is for you only. We want to make it more and more information. We want to share more and more wealth of information with you people, and this feedback will definitely give us a very valuable insight. So here is the result. 98% of the people found it useful, and 2% people have, I think, more expectations, or maybe different kind of expectations. I request all of you, whether you liked it or not, to give us the feedback directly. You can give it to my WhatsApp number, so that we can make it more productive, more useful for all of you. Thank you for participating once again. So this is our WhatsApp number. This is also visible on my image, but here it is. You can give a request here. You can give a feedback. And also we have made the city-wise, we have made the WhatsApp groups, so as to inform you, so as to give you the sharing, knowledge sharing, not more than one message in a day. It is only an admin only message, admin only groups. So if you want to be a member of that group, kindly send us the request on this number, 9755920780.
Osman sir, good afternoon. First of all, hearty congratulations for your tremendous journey from 1 lakh to 1 crore in a short span of 20 years. And you were a product subscriber. For the last 1 year, I want to share my journey with smart work. Basically, I'm a civil engineer. My name is Srikanth. I am doing investment for the last 15 years. But for the last 15 years, every year I'm gaining some amount and losing after 1-2 years. Totally for the last 15 years, I didn't get any profit more than FD. But last year in 2020 crash, I could able to uh, find smart work products, and I had joined your webinar on one fine day. So I got confidence in your suggestions, and finally I subscribed to Dr. Smart product. With your reply, I could able to understand what mistakes I have done, and I have subscribed for Freedom Smart Freedom profile product, and then I have gone through your book also, Way to Billionaire book. After going through that book and your Dr. Smart report, my patience and thinking style is totally changed, and I felt very happy with the way you have given details in report. So I started changing my portfolio, and I have totally got confidence in your products.
So this was the feedback from one of the subscribers who joined last year. So the advice is invest in stocks, invest for long term, invest in good stories available at attractive price, and invest with proper guidance. Yes, guidance is very much required. Until unless you get the confidence, you get the conviction, if you have the time and resources to spend on learning and finding the worth of the stock. Ultimately, what matters is the worth of the stock. Yes, for everything there is a worth. So if somebody asks you to buy XYZ stock, suppose it is quoting at 1500 rupees. So you must be able to find out what is the actual worth of the stock. See, when we go for a grocery, when we purchase any grocery, when we purchase refrigerator, we ask for the price. What is the price? And we know very well, around 20,000-30,000 rupees, you get a decent fridge. But if somebody says that costs 1 lakh rupees, definitely I'm very sure you will say that no, this is not the worth of the refrigerator. But when it comes to stocks, we never ask what is the worth of the stock. We are always interested in returns. So everything has a worth. You have invested so much of time in this webinar. So you must have tried to find out whether it is worth attending this webinar or not. Although you have not paid anything, but in your subconscious mind, I'm very sure you all must have thought, is it worth investing 1 hour, investing 1.5 hour? So when you do it for this, why not for stocks? So whenever you get an advice, ask what is the worth, and then you will see what the reply comes. So with this, we have come to the end of this presentation, and we have taken 10-15 minutes more than the targeted 50 minutes of presentation. Now we'll follow a question and answer session. You can ask the questions, you can write in the chat box, and you can use the reaction button to raise your hand so that I will unmute you and you can ask the question. Thank you very much. Mr. Umesh, kindly unmute yourself.
So, good morning, sir.
Good morning.
It was a wonderful session. In fact, I feel very unfortunate that I came to know about you only 2 years back, sir. Had I known about it much earlier, by now I think I would have retired by now from my company. Anyhow, going by that. Now, one more thing, sir, when you say equity, that is 100 minus your age, that means equity and mutual fund as well, sir, or only in equity, sir?
Yeah, equity, when I say equity, it can be a direct investment or it can be an indirect. Indirect, I mean to say through mutual fund also, it goes to the equity only. So it has to be seen in totality.
Okay. Sir, second thing is about the investment in gold. When we say investment in gold, whether physical gold or now the government is coming with a lot of bonds, and one more thing is NDMC, they have come out with that gold what do you call, buying it through every SIP sort of thing, sir. Which is the best option?
See, both the options have their pros and cons. When you buy through a paper gold, then of course you are investing. It is purely an investment. When you buy a physical gold, you get two types of returns: one from the appreciation in the price of the gold, and one from the happiness of your spouse. So choice is yours.
Okay. Thank you, sir. Thank you very much, sir.
So there is a question that can you plan for a paid workshop on finding the worth of the stock with worth of the stock with 6 examples? Okay, with examples. Of course, we had a workshop on the P ratio, means the beyond basics, P beyond basics. I think last month or before last month we had a workshop, and there was a very good participation. And soon we will come out with one more workshop, probably as you said, regarding the finding the worth of the stock. And what are your fees and expenses ratio? There's Mr. Ajay Kumar has raised a query in the chat box. So our fees varies from product to product, and it starts from ₹3,000 and the maximum is 8,000. So it is a very small fees when you compare with the kind of returns you are able to get with the kind of investment you are making. It is a very, very nominal fees, and all these fees is for 1 year. Is it better to invest in mutual funds or index funds? As I said, majority of the mutual funds are not able to perform better than their underlying indices. It would be better to go for index funds if you feel that the mutual fund what you have selected will not be able to outperform the underlying index. Okay, Mr. Jeet.
Yeah, very good afternoon, sir. As usual, an excellent session from you.
Thank you.
This is the hallmark of your presentation.
Thank you.
Sir, your recommendations are absolutely awesome. And you are very talented, I would say, to pick the multi-baggers. It's not easy. And to come with those every month or once or twice, this is fantastic. And as such, smart gains also, the targets you give, they also achieve the target very easily and also go beyond that.
Yeah.
That is also that. And my question to you is, regarding the company BHEL as such, as you've already worked with it for so many years, I would like to know your suggestions to your company BHEL. What should it do to turn around itself? It may be uncomfortable. I'm very sorry for asking this question, but I felt it is important actually.
Okay. Are you working in BHEL?
No, sir. I'm just an investor in BHEL.
Okay. See, one thing is there. I have never invested in BHEL, and there are reasons for that. Because in whichever company you work, you are biased. So maybe on the positive side or maybe on the negative side, but you are always biased. And what you have the perception about your company is very different from the perception of the employees. As you must have noticed in case of the IPO of Zomato, employee quota went undersubscribed. And then on listing, it has given almost 80% returns. Why like that? Because employees are always biased and most of the time on the negative side. And being in BHEL, I could not, buying the shares of a BHEL would be a bit tricky because as an employee, I cannot buy with for the certain durations and all those things. And I never purchased the shares of BHEL, never I have recommended. So I have always kept myself away from the company where I was working. And regarding the present scenario, all these thermal power equipment manufacturers as well as the generators like NTPC, they are passing through very challenging times because of the pollution these thermal power equipments create, and they are working towards controlling the pollution, but it requires, I think it requires significant kind of either a diversification or something else. I don't know, means presently, because from last many years I'm not in VHL, so I'm not well aware and not updated regarding the future plans. So I can't comment.
Thank you, sir. Thank you very much.
Mr. Dinesh Tiwari.
Good afternoon, sir.
Welcome.
Thank you for your rich guidance. We are also benefiting from your guidance regularly. And I have a few queries. There are certain points like if we go with the philosophy of Mr. Warren Buffett, he used to say, if you are invested, then stay for forever.
Yes.
So with but there still remains some confusions that how long should we stay, because there are people who says that we joined a group, we invested in some company around say 10 or 15 years ago, but today that company is not, at that time it was doing marvelous good, but either vanished or it is on the verge of finishing. So in our, say if we have next 10-15 years of our earning maybe before retirement, so is there any stock or a bunch of stock, say 4 to 5 stocks in which we can keep ourselves invested forever, uh, looking like if there is some big names like Pfizer, and if we want to grow money very quickly or with a very good rate of returns, so we have to keep on selling one and buying other, selling one and buying other every week, or maybe in a 6 month or a year, so that we keep active ourselves to get maximum returns. So how to balance, because nobody can have a bunch of stocks, say 50 or 60 stocks in their portfolio. Maybe it's ideal to have a 15 or 20 stocks only, but among those 15 stocks, can you suggest say 4 or 5 stocks for investing forever, so that we just fill it, shut it and forget it, like, and some remaining 10-15 stocks where we can keep on buying and selling to maximize our return. Thank you.
Okay. Regarding the length of the investment, one office says that you should find a stock where you remain invested forever, for the lifetime. And also I have showed in the presentation, there was a how you start and how tributaries and more rivers mix with the original river, and then how we draw the canals and how at the end that mixes with the sea. So same with the our investments, we should not try to sell everything, because as long as we are there, we are in need of money, and stock market offers a best opportunity to multiply your money. Regarding the stocks, yeah, merely investing in stocks for long term will not work. You have to always keep on checking the story. How's the story? What the management is thinking? How they are coming out with new products or innovation or new technology or anything, new diversification, related diversification. As long as that story is intact and the valuations are attractive, you have to remain invested, maybe for 10 years, 20 years, 30 years, 40 years. Like, I will give you an example of HDFC Bank. Company's earnings per share is growing at the rate of about 20 to 25% from last so many years. And if the PEG ratio is about 2, you can go and invest in HDFC Bank. And those who have invested from last 20, 25, 30 years, they know very well how much kind of returns they have generated. So you have to look for such companies. And this will not do that once you have invested, then you will not look after the story. Story is very important. Like in Bajaj Finance. In 2011, it was 62 rupees. Today, it is 6,200 rupees. So in 10 years, 100 times. And still the story looks good. If you read the results of Bajaj Finance in the notes, you will find that they are coming out with something of a super app. From a single app, you can buy lot many things. You can apply for your house loan and lot many things you can do. You can even trade in shares and all those things. So this is how the story develops. So as long as the story is good, remain invested. That is the best way. But if you ask that buy some share and forget for 15 years, 20 years, I don't know, maybe 5 years hence, story may change because of the technology or because of the management, change of the management. So we have to be very, very careful. So that is what I would like to share. And gone are those days. When I started in 88, 89, then I found that Colgate, Hindustan Unilever, and many more such stocks, they used to give bonus every 2 or 3 years in the ratio of 1:2, 1:1. So you need not have to do anything. Just buy those shares and forget it. But now it is not like that. I hope I replied to your this thing query. And also, when we give an advice for in multi-bagger, suppose if I give an advice for 5 years, we keep on checking the story whether it is still intact or not. It is still intact or not, like that. Yeah, Mr. Viral Ashar. Yes,
Hello,
sir.
sir.
Yes, sir.
Sir, it is always enlightening to attend your webinar. Very good webinar. Thank you very much, sir. Sir, I have two queries. One is in one of your slides, you showed us that in the long run, it is very difficult to outperform the benchmark.
Yeah.
But you have outperformed since last 20 years.
Yeah.
So from now onwards, what is the time frame that you are looking at that these many years we can still outperform the Sensex? And this is the first query. And second query is, say my father is retired now.
Mm-hmm.
He is at the age of 62, 63. He wants to invest some portion in equity, but what should be the ideal portfolio that is the least volatile? He is comfortable with equity, but is not comfortable with the volatility of the portfolio.
Mm-hmm.
So out of your bucket of services, what is the ideal solution that I should give him?
Okay. The second part you said, your dad is 60 years of age and he wants less volatility. And we should try to appreciate that volatility and risk are two different things. If you are investing for a day, then volatility is the prime importance. It is highly risky if you are investing for a day. But if you are investing for 10 years, then is hardly anything. Rather, the volatility should be your friend. If you're investing for long term, then you should pray that the market should keep on moving up and down too much. I love the volatility because that gives you an opportunity to buy at low price and sell at high price. But then you should have a strong conviction and a strong capability to find the worth of the stock. And sorry, I forgot your first query. Please repeat.
Sir, what do you think that how long still from now onwards you can able to beat the
During
Sensex?
the last 20 years, of course, we have given 26% CAGR returns and 26.6 to be precise. And compared to Sensex has given about 14% CAGR returns. But it is not like that every year we have outperformed the index. No, it is not like that. And out of these 20 years, for 6 years, Sensex has outperformed us. Why? Whenever the Sensex falls down, it outperforms us. Yes, we are beaten by the market. The reason is we are looking for 2 years, 3 years hence, but market is looking for the immediate, what has happened in the recent past. So if I go for high PE stock, say Bajaj Finance, and when the market falls, Bajaj Finance falls at more than double the rate. And that is why my portfolio falls. My means whatever we advise, our portfolio falls much more than the Sensex. And that is how we underperform. But subsequent to that fall, whenever the market rises, our portfolio far outperforms the market. And every time it happens, it has happened every time. So that is how overall we have made very good returns. But if you compare year on year, whenever the market falls, we have underperformed. And regarding that, will we be able to repeat our performance? I would say that we would do better than the Sensex. much better than the Sensex in the next 20 years than what we have done in the past. Because every day, every year, we keep on learning, and we are not going to repeat the same next time. That is how we keep on improving. And if you have seen the chart, you will find that the gap with respect to the index has always increased. So that is the indicator that we are improving at a very fast. I don't have any confusion, any doubt that we won't be able to repeat our performance. Even we will perform better.
Thank you. Thank you, sir.
Thank you. What is your thought on investing in ITC for a long term? Seeing it is the best Twitter joke for many years because of the way it has been performing. Yeah, because in ITC, it is the cigarette division, which is making huge profits, and those profits are being used to compensate for the less profits being made by the other sectors like paper, FMCG, and many more things. Efficiency in other sectors, apart from the cigarette business, is very low compared to the other FMCG players. So, if you are investing in ITC, then you will have to wait for until unless the company separates the different divisions into the different companies. But then there is an associated opportunity cost. To give you an example, I believe in the month of March, when the Sensex hit 26,000, at that time, ITC was about 160 rupees. Today, Sensex is 100% more, and ITC is sitting on only, I think, 35% gains. So that is the opportunity cost you have to pay. And so accordingly, you will have to keep the weightage in a way that it does not impacts your portfolio performance in a big way. Is it feasible to invest when market is at all-time high? A very interesting question. And this question I have been answering from last couple of webinars. It is very interesting. How many times you are able to identify that this is the peak? I think probability is less than 1%. This is one thing. More than 65% of the time during last 25 years, the market was at its peak plus minus 5%. So more than 65% of the time, market was near to plus minus 5% of the peak. Another thing, had you invested during the peak, okay, every time during last 25 years, then your returns would have been 9.2% CAGR. Every time you invested at the peak and still your returns are 9.2%. You cannot identify even a single peak, but assuming that you identified all the peaks and you sold off everything, you could not identify and you invested every time at the peak, your returns were 9.2%. So don't bother about the peak. Whenever you look back at the Sensex, you will find that you made a mistake by not investing. For long-term investors, not for a month or a year or 2 years, for at least 5 years. And again, in 2008, Maruti was something about, I think, 700 rupees at the peak last day. And today it is 6,000, 7,000 rupees. So even from the peak day, you are getting 10 beggar in 13 years. Not bad. So don't forget about the peak, and always be concerned about the stock you are purchasing. You cannot predict market. No one can predict market consistently. So always focus on the stocks you have in your portfolio. Mr. Puneet Mathur.
I'm lucky enough to attend your seminars. And like to thank you first of all. Just last week only, I take a call to buy your subscription of Multibagger. I invested 40,000 and I have recovered the fees. So, first of all,
Sir, please
thanks for
speak
that.
loudly. I'm not able to hear you properly.
Hear me now?
Yeah, now.
Yeah, very good afternoon to everyone and to you, sir. I'd like to tell you that last week I have joined, not last week, probably on 15 July. In fact, you have given one multi-bagger stock, and I have I have purchased that stock with amount of 40,000, and I'm able to recover the fees. So thank you so much for that. And I would like to say that many of the times we think that we can do it on ourselves, but it is not that thing. I probably don't get time to do so much of things. So by getting your personal guidance and by attending the webinars, I can only get the knowledge. But the time when we are working in offices, it's really tough to do all such stuff. So, so like by picking your stocks, I mean, you can able to get good returns on the stocks, and you can safely pouch on that. So my request to everyone that you can just try with this with this thing and start investing by the convection. Like I've been attending this webinar from last 6 months, 8 months, but didn't buy the subscription. So it's very useful, sir. Thank you so much for that. I just like to convey my thanks to you. And yes, I have learned a lot fundamentally. Also, like I have learned from your seminars that you are basically into a fundamental stocks, which it's not on the technical basis that I have learned that previously. Also, like have analyzed the stocks which you have given a multi-bagger returns. So just want to say thank you to you, sir, and like to be associated with you for a long time, sir. And portfolio building, if you can do something on the portfolio building part, because what I have gone through your products, it's like investment in a SIP mode, more of a stocks which you give on a monthly basis, like or monthly basis, like or Wednesday type of stock. Every Wednesday you give a stock. One of the offer is like the multi-bagger stock you give every month, which I have subscribed. There are different types of products, but can you do something for the portfolio? Maybe like if you someone wants to start with 5 lakh or 10 lakh, you can just share a few stocks and charge for fees for that. So then lump sum investment can be made for a good period of time. So if you can just think on that aspect, sir, and maybe we can be much more help. I mean, your products are wonderful, but anything which is related to portfolio, sir, portfolio building, like lump sum payment, we can invest in some stocks. Which you suggest, sir?
Mr. Puneet, thanks for your feedback and thanks for subscribing to our services. And also thanks for attending our webinars regularly. As you said, you avail the service, and in the first advice itself, you recovered the fees. So for the others, I would like to tell you it was only a by chance. And we are not masters in short term. We are always advising for long term, and particularly the service which he mentioned, smart multi-bagger, our minimum holding period is 2 years. Of course, we are always looking for the underpriced stocks, and sooner or later the market will identify that stock. So it happens, sometimes it happens in a very short period of time, and sometimes it takes a long time. Last year, in I believe in September, we recommended Acrysil at the price of rupees 129, and today it is 610 in less than 1 year. So it doesn't mean that I was knowing that it is going to be 600 rupees. No, not like that. So it is the story, it is the results, it is the story how it kept on changing during the COVID time. In European countries and even in US, there are many many people opted for renovation of their kitchen, renovation of their house, and that is how this company came into the picture and how they expanded their capacity. Every 3-4 months, they are expanding their capacity because of this thing, and they also have the unique technology of their products, that is granite sink, and that technology is only with 3-4 companies. So it is a mix of many things. Okay, so we gave an advice of minimum 2 years, but it happened within 4-5 months. So it is only a chance, not only a chance. Of course, there is a story factor behind it, but the stock rises so fast. We at the time of the advice, we never knew that it is going to be like that. There are many stocks and many services regarding the portfolio. We are giving, with every advice, we are giving you the allocation to be made in your portfolio. That is the only help, and that is a great help that we can offer to you. That is the advice we offer to you. And accordingly, you can build a portfolio. Of course, it is not a total portfolio management type of service, but you can get a rough idea how much weightage we should have. There is a query in the chat box that the story of a company is to be checked quarterly basis. Story of a company need to be checked regularly, not only on quarterly basis. It happens, keep on happening. Story means like the results, commentary by the management, the dividend, credit rating agencies, they give a rating whether they are revising upward or downward. That is all is, and the corporate governance issues. This is a regular process, and it becomes very natural. Once you are into this field, then it becomes very natural to check for the story. How to select which service of you one should subscribe. So it all depends on your investment horizon, the kind of returns you are looking for, the kind of investment you can make. If you can make regular investments every month, then you can go for smart SIP and even also for multi-bagger. If you want to invest for long term, then go for smart SIP and multi-bagger again. If you want to invest for medium term from 3 months to 2 years, then go for smart gains. If you want to invest for very long term, means like maybe for 3-4 years and lump sum amount you want to invest, then go for smart freedom stocks. Also, for your help, we have given an option on our website wherein you can check for your risk profile, and based on your risk profile, we suggest the services which you can subscribe. So with this, I have answered, I think, all the queries on chat box as well as on the main panel. Okay, in Smart Billionaire, each time we sell, we need to pay 10 to 15% tax. Is that also considered? No, that has not been considered. There are many things, many other things like the brokerage we have not considered. And also in case of dividend, we have not considered. We get about 1.5% dividend every year, that we have not considered. And also in portfolio, we are not selling, our churning is not 100% every year. So we need not have to consider 10 to 15% every year. So there are, we cannot, it is not a kind of a portfolio, it is only a basket of stocks. And also we are making changes only on Wednesday. So there are many limitations and many differences. And of course, 26.5% CAGR is way above whatever the expectations investors have. How to compare with respect to investment gains versus risk versus liquidity. In stock, if you're investing for long term, I don't see any kind of risk. Yes, I repeat once again, if you're investing for long term, say for 10 years, there is no risk because corporate cannot fail. No government can afford to let its corporate fails because all its income will go. So if you have the good neck of selecting the stocks, good stories, then there is no risk in the long term. Liquidity is excellent. Anytime you can sell your stock and within 2-3 days, you will get the money back. So liquidity is excellent and returns are very high. So I don't think there is any other investment asset which can give you this kind of returns. So with this, yes, at the age of 61 years, yes, as I said that if your age expectancy says 80 years, then at the age of 61 years, you have got 19 more years, and 19 years is pretty huge investment horizon. So nothing wrong. So with this, we have come to the end, and thank you very much for sparing your valuable time, and thank you for participating in the polls and also your feedback and your queries. Thank you. Bye-bye.